I'm going to talk about HEIKEN ASHI Candlesticks and what on earth are they and how can they help you to improve your trading, your day-to-day trading. At the end of the day, we trade because we're trying to make profit. In the process of trying to make profit, you will lose, period. There's no ifs or buts about it. You will lose. So becoming good at trading involves learning how to not lose as much. So learning how to manage your risk, manage your losses. And it's to that end that we constantly learn more different methodology, more strategies, different features. And so the HEIKEN ASHI candle is just one of those. I'll take your questions afterwards. And so I'll move back to HEIKEN ASHI. And what are they? They are candlesticks. So I'll just read straight off my document here. It says that HEIKEN ASHI technique can be used together with your other candlestick charts to spot market trends. So you use them to spot market trends. And your HEIKEN ASHI are just candlesticks, guys. So what do the candlesticks do? They help you to spot a market trend quicker. 2, they help you, it's useful for making trends easier to analyze. Sometimes it's difficult to identify the trend of the market. So with your HEIKEN ASHI, it makes it very clear what is going on with the trend at any moment in time, guys. Very, very important. Now, this third point on HEIKEN ASHI is really what endears me to it. What causes me to constantly use HEIKEN ASHI in my day-to-day trading. It says the third point: use HEIKEN ASHI charts to know when to stay in trades. When you need to stay in your trades while a trend persists. And also, they let you know when to get out of your trades, guys. Now, let me see what I'm going to pull up first. Thank you for that. I think they call them super chats. Okay, HEIKEN ASHI. Now, if we look at this Ethereum, let's look at this Ethereum chart. Now here we just have regular candlesticks. Now with the regular candlesticks, pay attention, guys. We see with the green candlesticks, we know that a green candlestick represents an upward movement. A red candlestick represents a downward movement. And then we have the wicks. And the wicks simply show you the extent to which price movement did go within that time frame. So in this case, we have a 1 hour time frame, and within the space of 1 hour here, the price of Ethereum came all the way down to the bottom of this wick, but it ended up closing at the bottom of the body of the candlestick. But when we click on HEIKEN ASHI, and where we get it from is at the top. So I'm in Trading View right now. At the top of your Trading View, what do you call it? Taskbar. If you click on this here that says candles, and it actually gives you different ways you could represent your data. And this is the one you need, guys. HEIKEN ASHI. And HEIKEN ASHI in Japanese means something like average, the same as we have our moving averages. So also the HEIKEN ASHI kind of, I guess, represents something along those lines, hence the name. So it shows averages. So if I click on HEIKEN ASHI, we have almost the same looking candlesticks, but they're different. Now, anytime you have a green HEIKEN ASHI candlestick, it means the trend is upwards trend. So at this point, stay in the trade if you're in a trade, or enter your trade. At this point, stay in a trade, stay. The minute it changes, get out of the trade. Okay, now that's just like 1/3 of it. Now, A HEIKEN ASHI candlestick wick, the top wick, means that the trend upwards is very strong. So the stronger the upper wick, the longer this upper wick, then that means the trend is going to continue upwards. Look here, the upper wick is reduced, the body is reduced, means the trend is slowing down. If you're super conservative with your trades, then you want to maybe start thinking of getting out of your trade when you see a wick like this one. Okay, but I think to represent it a little better, I'm going to go over to one of my other trading platforms, which is THINKORSWIM. We see a green candlestick down the bottom left here. So the question is, do I enter into this trade? Do I not enter into a trade? Of course, guys, I don't know if you've been with me long enough. I never trade without support and resistance levels on my charts. Okay, your support and resistance levels are important because they let you know, also they inform you as to when a resistance is coming. Resistance means there are sellers waiting at that price level, and sellers, when they start selling at that price level, price will go down, and you don't want price to go down as a long trader. It's a bad assumption, but I am assuming most of us, especially newbies, you want to go into positions long. You don't want to be selling shorts at this point, not when you're a new trader. So you're going in at a low price and you're waiting till the price goes up so you can make a profit. So that's what I would expect. So your support and resistance levels let you know that a resistance is coming. Take your profit now, or at least take some profit. So where this candlestick is, let's see. So to the left are regular candlesticks, and to the right are HEIKEN ASHI candlesticks. This whole green section here, they have HEIKEN ASHI candles with the wicks at the top. That's what I'm trying to get across. At the left, we have regular candlesticks. These wicks at the top are the ones that let you know that you can stay in your trade a little longer because the trend is going up. The bottom wicks show that the trend is coming down, and of course red shows that the trend is going down. But look over here. If we look at these in the white box, we can see they have bottom wicks. Bottom wick meaning price is going down. Red candle means price is going down. So by the time you see this first one, in fact, by the time you see this little doji here, then you may want to consider coming out of your trades. Just depends on what you're doing. Of course, if you're in a trade over a long period of time, it makes no difference to you because you're going to take the good, the bad, and the ugly. You're going to take the upswings and the low swings. So you're in it, say, for months. Like I'm in Bitcoin and I'm in it, period. But if you're a day trader or a swing trader or even a scalper, then you want to know when to get out of your trades. Now, when we look at over this side, we see that the candlesticks have upper wicks, upper body. That shows upward trend. But so if you're at this point, or you're even at this red level point, and you're trying to consider, should I go into the trade, or even should I increase my position sizing? So that's another thing. You get in with 100 shares and it's trending nicely. Then you want to increase your position size to 200 shares. Is that a good thing to do? You don't want to do that if the price is going to reverse on you. Okay, but our HEIKEN ASHI candlesticks show us that it's a good time to get in because the upper wicks are still very, very long, and that means the trend is going to keep going until we get to this here, and then it's time to get out because, hey guys, you can see the color changed. That's the first thing. The color of that particular candle, HEIKEN ASHI candle, changed, its color changed, and it developed a lower wick. Time to get out. And then we see 1, 2, 3, 4, 5, 6, 7, 8, 9, like 9, 10, 10 times 5 minutes. That's 50 minutes. Price is just consolidating. It's not going up. It's not going down decisively. And do I go back into this trade? Yes, I would go back into this trade once we break above. Now I'm going to draw. Don't draw your levels on your HEIKEN ASHI candles because they're not too representative of what's going on. Draw your levels on your regular candlesticks. So the question also, would I go back into this trade? Yes, I'm constantly drawing levels when I'm trading. There, I would have drawn another level here. I could have gotten out of this trade. I could hold. It just depends. How do you know whether you want to keep on holding? You're not only going to use HEIKEN ASHI. You're going to use other things. I always look at my higher time frames. Yesterday, I was constantly looking at my daily, constantly looking at my hourly. Like, should I stay in Amazon longer? And I'm so glad I did that because I stayed in literally to the end of the day. And you guys, you can see by the end of the day, yeah, that thing had hit its high point. With the red candlesticks, they show a downward trend. The downward trend will continue as shown by the HEIKEN ASHI candlesticks. For as long as the wicks are at the bottom of the HEIKEN ASHI candlestick, then that means that downward trend is going to continue. So with the HEIKEN ASHI, you need to be concerned if you're in an upward trend. Once the upper wick disappears, or it starts producing a lower wick. Lower wick is for downtrending markets. Upper wick is for uptrending markets. Bigger body means a strong movement. So here we have the green. This large body turns into a small body and it develops a lower wick. So that's already telling you that that upward movement is coming to an end, at least momentarily, and maybe a good point at which to exit your position. I hope it's been useful. If you have no more questions, I'll be moving on. It's a weekend. I know everybody's busy. I appreciate the time that you guys have spent with me. I hope you have learned something. And I will be here same time, same place next week.